Welcome to U.S. Tax Classroom. If the first two explainers of the series covered what is actually on a W-2 and the different types of 1099s out there, this explainer answers a much bigger question. What does it actually mean to be a W-2 employee versus a 1099 contractor? Because, this isn't just about which piece of paper randomly arrives in your mailbox in January. We are talking about massive legal and financial differences here. Your specific classification affects exactly how much tax you pay, who is paying it, when it gets paid, and what deductions are actually available to you. So let's dive right into this. Here is exactly how we're going to break this all down today. First, we'll define the core difference between an employee and an independent contractor. Then we'll look at how taxes work specifically for W-2 employees, followed by how they work for 1099 contractors. After that, we'll do a side-by-side tax comparison, look at the incredibly common scenario of having both a W-2 and a 1099, and finally wrap up with misclassification and key takeaways. I assure you we are covering both the basics and the complex scenarios today. Section 1. Employee versus independent contractor. At its most basic level, worker classification is fundamentally about one thing: control. It is all about who controls the work, who controls the schedule, and who provides the tools to get the job done. In plain English, if a company controls when, where, and how you do your work, if they provide your laptop or your equipment, and if they set your strict 9-to-5 schedule, well, that is an employee relationship, and that means a W-2 form gets issued. On the flip side, if you control your own schedule, if you use your own equipment, if you can work for multiple clients at the exact same time, and you're hired for a specific project, that is an independent contractor relationship. That directly connects to receiving a 1099 form. Let's see how this actually plays out in the real world with our two examples today, Tyler and Priya. Both Tyler and Priya are earning exactly $50,000 a year. Tyler is a W-2 employee working for a marketing firm, while Priya is a 1099 freelance graphic designer. Even though they have the exact same $50,000 income, their status completely changes their work life, their rights, and absolutely changes their tax bills. So if you're in this situation, either as a salaried employee like Tyler or a freelancer like Priya, understanding this core distinction is literally the foundation of your financial life.
Section 2. Taxes for W-2 employees.
For W-2 employees like Tyler, taxes are handled through automatic withholding. This means taxes are taken out of his paycheck by his employer before he ever sees the money. It's automatic. It happens with every single paycheck throughout the entire year. But it's not just federal and state income tax being taken out. There are also FICA taxes. The employee pays 6.2% for Social Security on wages up to a certain limit and 1.45% for Medicare on all wages. Let's look at Tyler's $50,000 salary to see how this math actually works. Every time Tyler gets paid, his employer calculates his FICA taxes. Over the course of the year, his employer automatically withholds approximately $3,100 for Social Security, which is that 6.2%, and $725 for Medicare, which is the 1.45%. Tyler literally watches this money disappear from his gross pay on his pay stub. But you know what? That is only half the story. Because here is the absolutely crucial point. Employers must withhold those taxes from you, yes, but they also have to match them dollar for dollar. On top of what was withheld from Tyler, his employer reaches into their own pockets and pays another $3,100 for Social Security and another $725 for Medicare entirely on Tyler's behalf. That is a total of $3,825. So the employer is actually paying taxes on your behalf that you never even see. That money goes straight toward funding your future Social Security and Medicare coverage. So if you're in this situation as a W-2 employee, your big advantage here is that your tax is handed for you smoothly throughout the year, and your employer is quietly paying exactly half of your payroll tax burden.
Section 3. Taxes for 1099 contractors.
But what happens when you don't have an employer doing all this heavy lifting for you? Well, for self-employed individuals, taxes are almost never withheld by your clients. When money arrives for a 1099 contractor, it arrives in full. Zero withholding, zero automatic deductions. The full amount simply lands right there in your bank account. And honestly, that feels great at first until tax time arrives. Because here is the harsh reality. As a 1099 contractor, you are legally responsible for the full 15.3% self-employment tax. Remember how Tyler's employer paid half of his? Well, Priya doesn't have an employer. So on her $50,000 freelance income, she owes approximately $7,065 in self-employment tax alone. That covers both the employee and the employer sides of Medicare and Social Security. And I really need to emphasize this, that $7,065 is strictly on top of her regular federal and state income tax. Because absolutely nobody is withholding this money for her, Priya has to make quarterly estimated tax payments throughout the year. And I want to give a genuine warning here. If this isn't planned for, the tax bill in April can be a real shock. Ignoring those quarterly payments will absolutely lead to IRS penalties.
But there is a silver lining for 1099 contractors, and that is business deductions. Unlike W-2 employees who generally cannot deduct their work-related expenses anymore, 1099 contractors can deduct legitimate business expenses. We are talking about things like mileage and vehicle expenses, the home office deduction, equipment, software, and even insurance premiums. These deductions are incredibly powerful because they directly reduce the income on which both your self-employment tax and your regular income tax are calculated. Plus, there is another massive perk. 50% of the self-employment tax you pay is deductible as an above-the-line deduction before your income tax is even calculated.
Let's see how this actually works to lower the tax bill. Going back to Priya's example, let's say she has $8,000 in legitimate business expenses for her graphic design business throughout the year. Maybe she bought a high-end computer, paid for her monthly design software subscriptions, and has a dedicated home office. She gets to subtract that $8,000 directly from her $50,000 gross income. Suddenly, her taxable self-employment income drops from $50,000 down to $42,000. That is a highly meaningful reduction in her overall tax bill. So if you're in this situation as a freelancer, this is exactly how you lower your bill. You absolutely have to track your expenses.
Section 4, Side-by-Side Tax Comparison. To really cement all of this, let's do a direct comparison between our two workers. We have Tyler, our W-2 employee, and Priya, our 1099 contractor. Both are earning exactly $50,000 for the year, but as we can clearly see, their tax profiles and their daily work lives are completely different. For tax withholding, Tyler's is totally automatic. Priya has absolutely none. For the self-employment tax rate, Tyler effectively pays just 7.65% because his employer covers the rest. Priya pays the full 15.3%. For quarterly payments, Tyler doesn't have to worry about them at all. Priya absolutely must pay them if she expects to owe over $1,000 in tax. For deductions, Tyler is very limited. Priya can deduct all her ordinary and necessary business expenses. And then we get to benefits. And this is where it gets important for anyone doing freelance work on the side, because as a 1099 contractor, there is no employer-sponsored health insurance, no workers' comp, no unemployment insurance, and certainly no 401k match. Priya has to completely provide all of this for herself, whereas Tyler likely gets a lot of these subsidized through his employer. Finally, Tyler gets one neat little W-2 in January, while Priya gets one or maybe even dozens of 1099 NEC forms from her various clients. So if you're in this situation, weighing a standard job offer versus a freelance gig, you have to account for these massive differences.
Section 5, Having both a W-2 and a 1099.
Now, what about people who actually have both? This is incredibly common today in the gig economy. Many people have a regular W-2 job and earn freelance or gig income on the side in the exact same calendar year. In this case, both income sources must be reported on the exact same Form 1040. The W-2 income goes on the standard wages line, and the 1099 income goes over on Schedule C. Let's look at James. James works a full-time job earning $45,000, so he gets a W-2. But he also does some weekend freelance work earning $4,000 net, which generates a 1099. James must report both of these. His primary employer has been carefully withholding taxes on his $45,000 salary all year, but nobody withheld a single dime on his $4,000 freelance income, and this catches a lot of people off guard. The withholding on the W-2 does not cover the tax owed on the 1099 income. James will owe that full 15.3% self-employment tax on the $4,000, plus his regular income tax on it. Even a small side hustle creates major additional tax obligations that you just have to plan for. So if you're in this situation with a side hustle, you have to pay very close attention to how these two interact.
Section 6, Misclassification and Key Takeaways. This brings us to a very, very serious issue in the modern workforce, worker misclassification. Why do businesses misclassify workers as contractors when they're really employees? Well, simply put, to save money. 1099 relationships involve significantly less tax liability and zero benefits for the business to pay. But classifying someone as a contractor when they are legally an employee is a massive problem. According to the IRS, between 10 to 30% of employers misclassify their workers as 1099 independent contractors every single year. Let's think about Priya's $50,000 income again for a second. If an employer misclassifies a worker earning $50,000, that worker is unfairly forced to pay the full 15.3% self-employment tax. That is over $7,000, when legally they should only be paying half of that. Plus, they illegally lose access to unemployment and workers' comp. The business shifts its entire financial burden onto the worker. So if you're in this situation where your boss dictates your hours, tells you exactly how to do your job, provides your tools, but then hands you a 1099 at the end of the year, you need to know your rights. Because you absolutely have power here. If you suspect you are being misclassified, you can submit Form SS-8 directly to the IRS. This form actually forces the IRS to step in and make an official determination regarding your worker status. It is a powerful protective tool for workers to ensure they aren't getting stuck paying their employer's share of taxes. It's informative, it's your legal right, and it is there specifically to protect you from taking on an unfair tax burden.
So let's wrap all of this up with our key takeaways. First, the core difference between a W-2 and a 1099 comes down to the employment relationship itself and who ultimately has control. Second, W-2 employees enjoy the simplicity of automatic withholding, while 1099 contractors get flexibility and business deductions, but they have to meticulously manage that full 15.3% self-employment tax and their quarterly payments themselves. And third, if you have both types of income, they both must be reported, and your W-2 withholding will not magically cover your 1099 tax liabilities.
Now, whether you are a W-2 employee, a 1099 contractor, or doing both, all of this income flows into one absolutely crucial number on your tax return. In video 4, our final explainer of the series, we are going to break down adjusted gross income, or AGI. AGI is arguably the single most important number on your entire tax return, and understanding it ties everything we've talked about perfectly together. So make sure you hit that subscribe button to join us here at US Tax Classroom, and I will see you in the next explainer.